Are you looking to set yourself up for tax time? Now we're past the end of financial year. It's time to get your ducks in a row and make sure you're maximizing your tax outcomes. Whether that's getting a PAYG variation, whether it's using the spreadsheet that we're going to go through today to get yourself in order, it's important to make sure you set yourself up well to ensure you have a straightforward and pretty stress-free tax time as you work with your accountant to get yourself a great outcome, potentially get yourself a refund, and maximize your deductions legally, of course. Now, my name's Luke. I talk all things real estate, renovating, and financial freedom on the channel, and I actually have a background as a chartered accountant. Even more than that, I used to be an auditor. So I'm not a tax specialist by any means. This is not tax advice, but what I'm doing today is talking you guys through how Emily and I set up our spreadsheets to maximize our tax returns and to keep everything in a simple and straightforward manner. So let's dive into today's spreadsheet, which you can manage your tax affairs and make sure you're maximizing your deductions, whether they're for yourself as an individual or whether they're for your investment property. So this is the exact structure that Emily and I use for each financial year. Now, the numbers in here don't reflect our personal tax returns. We've deleted all those numbers. And these are just example figures for you to punch in your own numbers when you want to. So the way I like to lay this out for Derek, our accountant, is to list it by individual. So my tax return, then Emily's tax return as person one and person two. So then you need to input your salary. So put in your salary, $95,000, and then put in the amount your employer has withheld and given to the government as PAYG withholding. If you've worked multiple jobs, you can add these multiple jobs and then add the tax withheld for each of those jobs. So that gives you a clear salary and expense structure. The next thing you need to add in is any shares or dividends and interest. So I like to add this in the section below. And in this case, we've got no interest. We've just got straight salaries. And then I like to have an investment property section separately. So in this case, we've got property one managed by ABC Real Estate, and they should give you a financial summary for the year. If you've got a good property manager with a good system, they'll be able to give you a statement of rental income and expenses. Now, I personally have all my expenses direct debited when it comes to council rates, water and electricity and things like that. And sometimes you can get your property manager to pay these things for you and add them to your rental statements. So your rental statement should show you the total income you've had for the year. So this example rental property brought in $29,290.32 in the financial year. We also had various expenses which we can claim as deductions against the income for that investment property. So we had expenses, so rental management and expenses and repairs of $9,283. We had insurance of $577. Water of $1,200, rates of $2,200, interest expense of $15,260, and some depreciation benefits of $4,464. Now, the big thing with depreciation is you should go to a quantity surveyor and get them to give you this number. Whether you've done renovations, or whether the property is old and has had some work done to it in the past, work with a quantity surveyor to go through the property, give a value and a useful life to each of the items within the home, and then use their report to claim depreciation benefits. You can see here this property would actually be positively geared if it wasn't for those depreciation benefits. So you'd have to pay tax on $707 of income split between the two owners if the property didn't have those depreciation benefits. Adding those expenses back in as depreciation is actually a non-cash deduction. And what that means is you didn't have to spend $4,400 during the year to get that tax deduction. So there's more benefit to you as a property investor. So in this scenario, the property is actually negatively geared. So look at your 1, 2, 3, 4, however many investment properties and add them into this kind of spreadsheet. Look at the income, look at the deductible expenses, where interest is obviously going to be your largest, and look at your non-cash expenses and calculate your tax deduction or tax payable for the year. The way this is done in this example, this property is owned 50-50, and therefore the income and the expenses are split 50-50 in the spreadsheet. So we have our individual incomes where one person earns 95K and the other earns 94K. So obviously a young couple or working professionals. And then in the scenario where they own the investment property 50-50, the rental income split 50-50, as well as the allowable deductions. As I scroll down on screen, you can see that there's other expenses here that you can then claim against your personal income. So this person may drive a vehicle for their work and claim a deduction based on the kilometers they've driven. Then they might have, this is my example where I've got a membership. So I'm a member of CAANZ Australia. And so in that example, those fees would be deductible because that relates to the job in this example. And then you've got some work from home expenses and maybe some donations as an example. Now, these are all example numbers in this spreadsheet. It's important to put in your own income, your own PAYG withheld, your own calculations for your investment property, which largely should be given to you from your property manager. And then those other deductions or allowable deductions around work, around memberships, working from home, accountant fees, donations, and so on. Add all of those into the spreadsheet. The amazing thing with this simple spreadsheet is, as you can see here on screen, it gives you a full view of your financial position for an entire year. It shows you your net income, which is what your accountant is very interested in. So your income less your allowable expenses. And it shows you the pay-as-you-go withholding tax that has already been paid to the ATO. So you can then calculate whether you owe the ATO money or whether you're going to get a refund. Now, in this case, these individuals are likely to get a small refund as long as enough tax has been withheld in their day job. The reason is they're getting further deductions, i.e. negative gearing, because they lost money throughout the year on their investment property. And so that $3,757 is going to be split as a deduction between the two individuals. Now, I use this exact template for our tax returns. And this is a very simplified version of what Emily and I use. Ours is a little bit more complex than this with our multiple investment properties, other deductions, business tax returns that need to be filed, and things like that. And obviously, there's definitely more benefits if you have your own business and you can do company tax returns as well. The real limit with running a company is issues with serviceability and borrowing and dealing with banks and complexity there. But there are some great benefits from an accounting point of view in terms of what you can claim and how you can run a business and using your BAS returns to claim GST back and those types of things. So I think this spreadsheet's pretty easy to follow along and can be a great way to compare your performance year on year when you're looking at your financials. I like to have a tab or a workbook for each of my financial years. I actually generally have a workbook, so financial year 22, financial year 23, and I'll have another one started for financial year 24. And the reason is Emily and I can then track how we're performing as a couple in terms of our annual financials against the tax office and whether we need to pay tax, which has been the situation for the last few years because of our investment properties, or whether we can claim some more deductions and be a little more efficient in that manner. Now, if you'd like a copy of this tax template for the next few weeks, I'm happy to send this out to people. So send me an email at hello@purposeproperty.com.au. If you're interested in working with myself as a Brisbane buyer's agent and looking to buy property here in the Southeast Queensland market, then head over to purposeproperty.com.au to book in a free strategy session. We'll sit down, have a chat about your situation, talk you through what we do here at Purpose Property and how we can help you secure an investment property or your own home here in the Greater Brisbane market. If you want to see a video breaking down 5 reasons why you should buy property in Brisbane, click this video over here. Thanks for sticking around. I'll see you in the next one. Peace.